You have to unmute. Your speaker is muted. Yeah. Welcome, Mr. Abhishek Gaur. Good evening. The speaker should be Mr. Gauri Shankar and Mr. Sripal. They got the link, no?
Yeah, they got the link.
Just wanted to tell you that this is being also live on YouTube.
Oh,
so just in case you want to share that link also, you can share. I just shared the link. I'll share it again if you want. It was there in the chat, but you can just, this is the link for YouTube.
Okay. Wonderful, sir. This looks good. It is currently live, or it would be live when we go?
Currently live also. You can say. I just started it because see what happens is most of the time you forget here. Then halfway someone tells us, "Arey boss, nahi aaya link." So I thought let us do it straight away. Welcome, Mr. Gauri Shankar. I'm Pankaj Trivedi. I'm Chartered Accountant. I'm Chairman of the branch.
Good afternoon, sir. Gauri Shankar here from Nsc.
Yes, Gauri.
Can you hear me?
I can hear you perfectly. I'm just giving this share screen options also. Now you can share screen directly. Okay. So that it's in your control. I will, Abhishek, you will be here throughout. Here comes the man who has done everything for the program. And Abhishek ji, is the signal good with you? If there is I'll just make you co-host. See, it's an extreme emergency. It has never happened before, but just in case, couple of people I make co-host so that if if there is a power cut, sudden something happens to me, it will be a backup. Okay. Welcome, Macharao.
Yeah, thank you, sir.
Namaste.
Hello,
Namaste,
sir.
sir.
Gauri Shankar ji.
Good afternoon, sir.
Good afternoon.
Hi, Vatsal.
Will also come.
Abhishek, have you got the share screen option?
Yeah, yeah. I've got it.
Yeah. You can try. You can just open the PPT and then click on share screen.
I think we are already live on YouTube, is that?
Yes, sir.
Yeah,
Yes,
I thought because see most of the people they would like to see on YouTube also.
Okay.
We have Zoom problem, no? So some people don't want to go on.
Okay.
You are getting the link of the YouTube, or you want me to just share it?
No, that's fine, sir. That's fine. Abhishek, can you try sharing your screen?
Welcome, Sripal. You are muted, Sripal. You are muted. So, yeah, perfect.
Me now?
Yeah, perfect.
Yeah. Hi, Shipal.
Hi Abhishek ji, how are you?
Good, good. How are you?
Good
Hi,
Lord.
Shripal.
Hi boss.
Gauri Shankar here.
Gauri Shankar ji, hi.
I'm just sharing the screen.
How are we taking it? Because we still have 4 minutes to go. We
Right.
sharp the given time. So ideally what happens is I'll not take more than 1 minute or so. I'll just welcome the members, welcome you all. And generally what happens is we hand it over to Machar Rao or the Central Council member. Today I think Machar Rao will just talk a couple of things about the program. So Abhishek ji, you are also going to speak something, give an overview, and then they take over, or how is it?
Gauri sir would take it right away from for NSC.
Okay.
So if in case he requires any help, I'll definitely be there.
Okay. So I will introduce Gauri Shankar sir, Sripal sir. So first Gauri Shankar sir will be speaking, or first speak?
First, Gauri Shankar sir would be speaking.
Okay.
After the chapter officials doing their introduction and all. So Gauri Shankar sir would be speaking, and then Shripal sir would be taking over and concluding it with a question and answer session.
Yeah. And I will introduce both of you. Machar, you are ready with
Yeah,
remarks.
I'll do the opening
You are
remarks.
the
Please.
boss. You are the boss today. You are the.
If you give me a minute, sir, can I just try to share the screen?
Please, just click on that green.
Are you able to see?
Yes, perfect. Just do a slideshow. Click on that. Perfect. Click on that. Yes.
You're able to see, no?
Yes.
How do I enable my share screen?
Yeah, it is for all. I think Sripal, you can also do it.
Okay, so can anybody see the PPT now?
No, Sripal, what you have to do is first open the PPT and then click on share screen. You
Okay,
can see
understood.
that green button, green thing beside chat.
Yeah.
So keep the PPT open and then click on the, yeah. Now we are able to see your share screen.
Yes.
Okay.
Yes, now it is visible.
Aryaman, right.
Okay, understood. So you can see now the first page.
Pankaj sir,
Yes,
can you
yes.
make it a little bit bigger?
Yeah, you need to, that thing is there, no, like this. You have to,
Okay.
now it's perfect.
Now it's perfect?
Yeah.
Okay, so
Sripal, apart from money, you have to also share how to look so young at this level. I may need it more.
sure.
Me too.
Maybe in a separate session.
Thank you. We are 1 minute into it, so we can just stop the share screening and we'll start it.
Yeah, how do you go out of this? Okay.
Stop share करना पड़ेगा आपको. Sripal.
एक minute, sir. How do I remove the shares?
Just ऊपर on the top you will see that red
Stop
color
share.
में stop share.
Yeah. Got it. Perfect. Thank you so much.
हो गया sir, zoom इतना ही है.
Simple है.
And thank you both for really coming, and thank you Abhishek ji, you took a lot of pain to.
Sir, our pleasure.
Abhishek ji has taken a lot of pain.
It's
Thank you.
always our pleasure to interact with professionals, sir.
That is.
And specifically from Hyderabad, being in Hyderabad, it's always a pleasure.
No, Hyderabad has missed out on SME exchange, I feel, personally. Out of the 600 issues, I mean, assuming this same exchange would have been launched in the 90s, I believe 250 would have been Hyderabad.
And thank you, Sripal. It's 3 p.m. sharp. So
Yeah,
keeping in tradition, we'll start the program.
Sure.
Good afternoon, everyone. On behalf of Hyderabad branch of SRC of ICA, I take great pleasure in welcoming the dynamic speakers of the day, Sri Gauri Shankar ji, as well as Sripal Shah sir. I would be failing in my duty if I don't thank Abhishek Gaud sir, who has taken a lot of pain for having this program, and Machar Rao. Both of them are jointly planned this program, and I also thank you at the beginning only for your efforts. So today, the speaker should be speaking on evolving opportunities of funding through capital markets. And as the topic suggests, it's all about money, honey. Okay. And as we all know, today, if someone wants something desperately beyond an option of coming out of their homes and moving freely, it's money. And most of the chartered accountants, we feel that we have only one traditional sources to get the money required. So we thought that why not have some of the experts coming and talking about. See, there are two sides of it. One is people have money, don't know how to use it, and people don't have money, they don't know how to get it. So I think this program has the experts who can answer the two queries very well, even if it is not covered in the presentation today. So I would not like to waste much time of them. I'd like Machar Rao to give the opening remarks, and then we can introduce the speakers and we can start. Over to you, Machar Rao.
Thank you, Chairman. First and foremost, I would like to thank Abhishek for his great pain to have this program, and along with other two speakers. Thank you, sir. Thanks for joining us. Initially, Abhishek and myself discussed about the program. That time, we thought that why can't we discuss about a general conceptual discussion about IPO, listing, trades, emerge, fundraising, and most important, what are the professional opportunities for the chartered accountants, and along with that, what are the recent major changes in this area? So, if I'm not wrong, is it correct, Abhishek ji? Yeah.
Yes, absolutely.
I would like to hear from the speaker, sir, Pankaj sir, is regarding trades, sir. It's a trade receivable discounting system. It was, I think, 2015 RBI has framed a lot of norms regarding this, and most of our chartered accountants are yet to concentrate on this area. This is basically an online electronic platform for MSME, for majorly bill discounting and factoring. Second thing is a very important topic I would like to hear from the speaker is Nsc Emerge. This is also an online platform for listing of SME. As our speaker is saying that Hyderabad is a little bit lag in this area. So almost 2000 plus companies are listed through this platform, online platform. And most importantly, sir, as a chartered accountant, I want to understand from you, what are the fundraising areas for particularly for SME business on new image concept, and what are the benefits and advantages for a chartered accountants for our clients? Second thing is, as rightly we have discussed earlier regarding the export and import concepts, what are the forex opportunities, forex hedging concepts and all. And most importantly, as a retail investors, we are into regular equity markets of stock exchanges. And along with that, we want to understand what is fixed income securities like I think recently there is an amendment in this regard. regarding government securities, treasury bills, and state development loans, etc., on debentures, etc. Can we do all these things through NSE and all? We want to understand from you, sir. Most important, last but not least, what are the key forces which drive a chartered accountants to come into this area? Particularly, what are the job availability? What are the? I'm directly asking, sir. Don't. What are the job opportunities for our chartered accountants? What are the professional assignments? What are the emerging opportunities for our chartered accountants? We want to understand. And finally, any specific knowledge about this? Do you need to do any specific courses or knowledge along with our financial expertise in chartered accountancy course? Because why I'm asking is majority of chartered accountants are in practice, regular traditional practice like accounts, taxation, and finance. Very few are in capital markets, sir. Really, they are doing very well, like capital markets and forex and treasury management. Very few are there, but they are doing very well. So, just as a financial expert, is it not an excellent task for us to understand this emerging area, but accept our mindset? So, let us hope this session will help us to do the same. And I request all the speakers to let us give good knowledge about this. And before handing over to Pankaj sir, I would like to again thanks to Abhishek for taking a very an excellent pain for designing this concept. And welcome sir, welcome the speakers. Thank you sir.
Thank you, Macher. Let me quickly introduce Mr. Gauri Shankar, who is a regional head BD South of National Stock Exchange of India Limited. He holds a master degree in business administration in international business from the Faculty of Management Studies, BHU. He has more than 15 years of experience in Indian capital markets and has worked in various roles at Nsc. He has got a comprehensive knowledge and understanding of listed derivatives and exchange traded products. His specialties include listed derivatives, business development, new product designing, and derivatives pricing. In his current role, he spearheads the business development of all the exchange products, education incentive, and SME listings in the southern region. I present Gauri Shankar ji to the august audience. At the same time, friends, not to just disturb them in between, I thought I'll also introduce another gem, Sripal Shah, who is a managing director of Aryaman Financial Group, and he's a management graduate and a holder of a 7th rank in Mumbai University, and is also a CFA charter holder from CFA Institute, USA. After leaving JP Morgan Chase Investment Banking in 2005, he has, over the last 15 years, set up the financial service business through Aryaman Financial Services Limited, which provides a bouquet of services including merchant banking, merchant making, stockbroking, depository services, portfolio management, and other related financial services. And his Aryaman Financial has been awarded by both NSE and BSE from time to time for being the top performing merchant banker in the SME IPO space. I'm not sure how much of money we all have in our banks, how much of money we carry, but definitely the next 2 hours will be full of money, money, and money. So over to you, sir. Gauri Shankar sir will start first, as I am told, and then Sripal sir will talk. Friends, don't bother about giving your membership IDs. Don't bother about any other thing. Just let us sit, enjoy the session. It's also on YouTube going live. And any questions, please put it in Q&A so that we don't miss out seeking the answers from the learned speakers. For Mr. Gauri Shankar and Sripal sir, don't worry what is coming in the chats. If there's a talk about volume and all, I will handle it. Okay. And even though my video would be off for bandwidth reason only, I'm not leaving an inch from the laptop, and I'll keep on answering the other questions. We'll take care. So over to you, sir. Thank you.
Thank you, Chairman.
Thank you, sir, for that introduction and setting up the context for today's session. Respected Chairman, CA Pankaj Kumar Trivedi ji, Vice Chairman, CA Macher Rao ji, Hyderabad branch of SIRC of ICI and other office bearers of the branch. My fellow speaker Shripal, ladies and gentlemen, it gives me immense pleasure to be here on this webinar talking about evolving opportunities for funding through capital markets. So when I talk about evolving opportunities, I think there's only one and only platform, which is Nsc Emerge, which is there right now to this August gathering today. And would like to thank the organizing team at Hyderabad branch of SIRC of ICI for giving us this opportunity to interact with you all. I hope all the people who are present, I think we have 54 participants now on the session. All are doing well, are in the pink of health, and as we are going through an unprecedented times, and there is a lot of uncertainty out there in the business and markets. I think the topic that has been chosen by the branch is very apt to this current situation, and I hope we'll be, as a speakers, will be able to do justice to that extent. The beginning, Macharauji has set the context in terms of what all the expectations that he's expecting from this session. As he said, we will try to do. I'll try to do my best in terms of covering majority of the aspects which are related to the direct topic today, and then anything that comes in the questions, we'll be able to kind of answer it in those lines. While everyone is getting prepared to live with the COVID, the new norm that has now emerged, and learning new ways to get back to work, the immediate challenge I think that the corporates will have to deal with is in managing their finances. I think particularly SMEs would require it to the maximum, and irrespective of the size, everybody, all the corporates are impacted in the current situation, and SMEs would definitely need. And maintaining last year's top line is going to be a major problem for many SMEs. Though the long-term outlook for the corporate India looks very positive, there is a need to work on addressing the immediate challenges, what we have discussed right now, that SMEs would face in terms of managing their finance. And also government announced a series of measures to support SMEs to deal with some of these challenges of late, and I think so far we have done well in that aspect. Abhishek, if you can just bring up the slides. Well, SMEs play an important role in developing nations' economy. Abhishek, if we can just go to the next slide, so that participants will be able to see and appreciate what is the contribution that really the SMEs do have right now in nation's economy. They are considered to be the backbone of the economy. I think it's a case with all the developing nations, not only particularly India. They contribute significantly to the employment, GDP, exports, all the facets that which you count as important to be part of an economy doing well. In today's session, I would like to talk about probably the session. I would like to talk about how to face these challenges in two different phases. I will talk about two platforms which have been created exclusively to facilitate the growth and development of small and medium enterprises on the exchanges, on the capital markets, on the stock exchanges. The first one is on addressing the immediate issues which are related to managing working capital requirements, immediate cash flows through TREDS platform. TREDS is a platform which is created by RXAL. And the second one to meet the long-term requirements or for their growth capital or the funding requirements through Nsc Emerge Platform. So moving on to the next slide, talking about RXAL. In the year 2015, RBI issued norms on trade receivables e-discounting system. In fact, Macharauji has already mentioned about this platform. So this platform actually paved the way for setting up of TREDS platform by RXIL. RXIL stands for Receivable Exchange of India. This was incorporated in the year 2016 as a joint venture between Small Industries Development Bank of India, that is Sebi, and Nsc. The main objective of this platform is to address the financing needs of MSMEs as well as the delayed payment issues that SMEs face while realizing their outstanding dues. We all are aware, in fact, there were researches which have been kind of conducted just to understand how many days it really takes for SMEs to realize their outstanding dues from their buyers. So on average, they take, 60% of the responses is that at least it takes 90 days. It's almost three months. So this particular platform facilitates to shorten the time period from almost 90 days to just 2 days, which is 48 hours, to realize, to face with the, or to counter the delayed payment issues, which I think majority of the SMEs face today. And yes, in the current situation, this gains very much prominence of the fact that cash flows, I think since there is a slowdown everywhere, so the cash flows, having the working capital is at most important. And through this platform, and to talk about this platform, it's an online electronic platform, and it's a mechanism, institutional mechanism for financing, or in terms of the platform, the vocabulary that is being used is factoring. So one can factor their trade receivables of MSME sellers against corporate buyers, government departments, and public sector undertakings through multiple financiers. So the participants on this TREDS platform include buyers, sellers. Like I said, sellers can only be MSMEs on this platform. The buyers, like I've said, the government departments and PSUs, so on and so forth. Of course, bill discounting platform operator is known as TREDS platform here. And the financiers, the regular banks who are otherwise also financing them for various requirements. Here on this platform, through this process of factoring, this is being done. So TREDS connects all these stakeholders, SMEs as sellers, then corporate buyers, government department, PSUs as buyers from these SMEs, and also the financiers who would factor the bill receivables. So like I've said at the beginning, it takes just only 48 hours. The factoring process is just a 48-hour process within which the SME will be able to realize the dues. They will be able to factor the outstanding bills on the platform, and from 90 days they can bring it down to 48 hours. And it's needless to mention about the importance of having proper cash flows in the current scenario. Now moving on to the next slide, if we see, what is that this platform offers to the various stakeholders and why one should probably look at it. We will see from 3 different perspectives who are the key stakeholders on this platform: sellers, buyers, and financiers. I would say it's a win-win situation for all the participants who are taking part on this platform. So we look at from the perspective of sellers. So here, whenever I say sellers, please read it as the small and medium enterprises or the corporates who sell those goods to PSUs and government institutions. So here they will be able to receive funds against approved invoices within just 48 hours. We already understood that. The SMEs will be able to shorten the time period to encash or to receive the bills or against their invoices. And also the platform offers greater flexibility to choose financiers, because the whole lot of financiers who are present on this platform. So once the sellers uploads their invoices and the buyers approve it. It goes to the financiers, and these financiers will bid for factoring. So the sellers, which is SMEs here, have flexibility to choose the best quote. At a, the financing can be done at a lower cost, and also no obligation on these SMEs who have factored their bills to repay the financials. The responsibility will be shifted to the buyers. So the buyers will be repaying to the financiers once these are being kind of factored in. Now, when we look at look at the benefits, we check out the buyers. They are very obvious, because once you institutionalize the payment processes, so it frees the finance team's bandwidth by allowing them to make a quicker and faster settlements. And I would say a bigger advantage than this point is, of course, since they are present on this platform, they can actually enjoy a better negotiating terms, competitive pricing from the suppliers, because by dealing or by supplying goods to these buyers, the SMEs can actually factor in their invoices. So obviously they will have a better procuring terms, negotiating terms from the suppliers. And also it streamlines the vendor payment mechanism, I think, which every corporate really focuses on. Now, when we move on to the benefits to the financiers here, so defaults are very minimized on this platform, as top-rated buyers are being enrolled, and the access to the buyer's ecosystem becomes so easy and so cost-effective that at one place, once the invoices are uploaded by the sellers, the financiers will be able to kind of get the access. It goes to all the financiers, though the seller or the SME has an option to kind of choose which financier it should go. But, if it is left to all to bid for their invoices, then, at one go at a lesser cost, they get access to the entire buyer's ecosystem without really have to spend much on marketing or on sourcing of clients. So these are the broader benefits of this platform. This is an excellent platform for SMEs to meet their immediate or I would say cash flow requirements or working capital immediately. Of course, this is a post facto thing. Once the goods are sold, these receivables are against those invoices, which they can realize within 48 hours successfully. Now, moving on to the Nsc Emerge Platform, which is created to facilitate again the growth and development of SMEs to meet their long-term funding requirements, growth capital. We saw in the initial slides the contribution that SMEs really have in the nation's economy. In spite of having such a high significance in the economy, SMEs still face a lot of problems, particularly with fundraising to meet their long-term requirements. I'm sure many of you would be aware that we have a platform already where larger companies or larger corporates are already listed after raising funds from public. That is known as Mainboard Platform, where we have more than 2,000 companies now already listed and are available for trading in the secondary markets. However, the eligibility criteria to get listed on the Mainboard Platform, it would be difficult for SMEs to meet that eligibility criteria. And also, for SMEs, the sources of funds have been very limited. They didn't have access to tap the public equity. So this triggered actually the need for creating an additional alternative and efficient sources of funding for SMEs. And because of which I would say Nsc Emerge has come into existence. The Prime Minister's Task Force in the year 2010 recommended setting up of a dedicated stock exchange for SMEs to create that ecosystem which will facilitate them to tap public equity. So to enable themselves to raise equity capital for the growth requirements or for their expansion, which was otherwise was available only for larger corporates who could satisfy the eligibility criteria of listing norms. Subsequently, Sebi actually has laid down the regulations for the governance of SME exchange platform, and also gave norms in terms of what would be the guidelines of this platform, and with a lot of relaxations, of course, to accommodate, to facilitate a lot of SMEs to utilize this platform, which led to setting up of Nsc Emerge in the year 2012. Moving on to the next slide. Actually, the platform does not require any collaterals. It's a very safe, as it is regulated by the same regulator, Sebi, and is available as a separate segment on NSE. So along with the regular cash, F&O, currency derivatives, commodity derivatives, this is also available as a separate segment on NSE. It is also expected to get a wide variety of investors into the business once the corporates are listed, as the same trading terminals. The same trading terminals which are used for trading the mainboard securities, and the same trading member network is used as the main exchange. We have more than 2 lakh of terminals available to our members, where all the securities which are listed on NSE gets traded, gets visibility, access, or investors do participate on those counters. So SME, the stocks which are also listed on SME platform will also be made available on the same platform, same network, same member network. So from members or the constituents, they may not really apply for any membership to trade in Emerge segment. So this gives a lot of ready market or ready network for small and medium enterprises to reach out to larger audience. Since 2012, since then, we have 210 stocks which got listed, companies which got listed on our platform, and more than 3,000 crores of funds have been raised. And when we look at the average IPO size on SME Emerge segment, there has been slightly over above 15 crores. The companies listed on Emerge platform, when we look at the representation, industrial representation, it has almost 19 different sectors, which shows there is a wider participation in terms of the sector or the segments contribution on the platform, or the presence on the platform. And also, out of these 210 stocks which are listed on SME Emerge platform, 38 corporates have already migrated to the Mainboard platform. We will discuss in the next slides, where what exactly this migration would really mean, and how it is different. So now moving on to the next slide. Having understood that there is a platform which is now available for SMEs, why we really do these organize programs with professional bodies like you and other various bodies, is you are the ones who will be having many corporates as your probably clients, or some of you may be entrepreneurs of those SMEs. What we see is probably there's awareness which is need to be created, is what we understood so far in all our interactions. So it is really important for you to understand. Okay, now having understood that there is a platform which is available for small and medium enterprises to tap public equity, Now, which all companies or which all corporates or which all of your clients who should be kind of considering themselves or looking at this platform to list? Let's understand that. So when one company should consider listing themselves or your client that you should be identified. So for this we have actually categorized or classified the companies, various corporates into these 4 buckets based on their phases of growth: startups, early stage, and growing stage, and larger companies. So at the startup stage, which is down below the 4th box, the sources of funds are mainly promoter owned. That is either owner's capital or funds borrowed from friends and family. Largely, this is what will be the sources of funds at the startup phase. Now, moving on to the early stage. So once from startup phase, when you move on to the early stage, at this stage, the sources of funds that net widens a bit, and where along with owners' own funds, the entity may also get help from government aids, promotion schemes, funding from banks, subsidies, or if the business is really good, then it may also attract some angel funds and VC funds. For corporates who are in that first bucket, the large companies, large corporates, they can easily satisfy the eligibility criteria. They can access the capital markets to raise equity, to raise funds through public equity. However, the entities which are just above the early stage and are aspiring to actually grow big, who needs this growth capital, they face the challenges to secure the growth capital, and they have very, I would say, very less additional resources where they can get funding from after early phase. The popular source of funds at early stage or maybe at the beginning of the growing phase, I would say banks. Banks, of course, will have limits to the extent to which they can actually lend to a corporate. Also, corporates are also asked to commit or provide sufficient collaterals or infuse additional equity into the firm so that the banks can do further rounds of funding. Some good corporates whose fundamentals are really good may also attract private equity investors. However, PE comes with its own caveats in terms of control that they may want to have in the decision making or even the affairs of the corporate. So the clients or the corporates who are in this particular phase, where after being in the early stage, now when they really want to kind of go to the next level or having the potential to grow, but they are stuck because the existing sources of funding, there's a limit or they've already hit that ceiling. I would say that is the time or the ones who are in the growing phase are showing good track record. I think they are the ones who should consider listing on this platform. By now, if you already have clients or you're dealing with any of the SME clients, you'll be able to kind of figure out for whom all you can actually introduce this concept to them. We will understand the advantages of this platform and what are the regulations on this platform prescribed by our regulator Sebi. So this is where you will have to play an important role. So let's understand, once you identify the companies who are in this growing phase. Now let's understand who all can list on Nsc Emerge. So if we have to look at the eligibility criteria, Abhishek. So the eligibility criteria prescribed by Sebi and Nsc. So what Sebi says is on the post issue paid up capital on face value should not exceed 25 crores. This is what the crux of those 2 bullet points it talks about. So on face value, the paid up capital post issue should not exceed for 25 crores. So does this mean that the company cannot raise more capital beyond the 25 crores? No, the answer is no. If the corporate or the SME fundamentals are good, or if the business can command a good premium, the issue size could be higher than, of course, the face value. It can command premium. It could be even as high as 100 crores. Also, there's no limit on the maximum amount of capital that you can raise on this platform. We have seen issue size of 90 crores also on our platform. So here there is a relaxation that is being kind of made by Sebi in this ecosystem to accommodate SMEs. Is the earlier norm was the post issue paid up capital has to be within 10 to 25 crores, which was required for the mainboard companies, which was also even the SMEs also within that paid up capital can access this or are eligible to be part of the Emerge platform. Even the corporates with paid up capital of less than 10 crores were also being kind of made eligible to be part of this platform. There is one big relaxation which opened doors for many small and medium enterprises. The other eligibility criteria is that the company to have a minimum of 3 years operational history. They should be at least having an operational history of 3 years, and out of which 2 years of positive cash accruals, and the corporate should have a positive net worth. These are the broader guidelines which a corporate need to meet in terms of the eligibility criteria to access Nsc Emerge platform. Now, if we look at the regulatory framework, moving on to the next slide, there has to be minimum 50 allottees once in an SME IPO issue. So this is again, I would say, a relaxation in terms of which has been done for small and medium enterprises. On the Emerge platform, there has to be minimum 50 successful allottees in the issue. Vis-a-vis on the Mainboard platform, the minimum requirement is 1,000 allottees. So there has to be at least 50 investors in the issue. And the DRHP is in the same format. However, the filing and the observations are done only by the exchange. Again, here it is a differentiating factor from the Mainboard listing platform, where the DRHP on the in case of Mainboard is filed with the regulator Sebi. Here, in case of Emerge platform, the DRHPs are filed with the exchange. Again, that helps in reducing the timeline required for an IPO. Yes, another important unique feature of this platform is there is 100% underwriting, which is there on this platform for SMEs to provide peace of minds to corporates. So once an SME decides to list and they file the DRHP, only except in the case where they themselves withdraw the their application or some regulatory action, excluding those cases, in no case it can devolve. I mean to say, there's 100% underwriting, so there is a 15% mandatory underwriting that need to be done by the merchant bankers here. The remaining 85%, if the corporate is fundamentally good, the merchant banker themselves may do the entire 100% of underwriting, or the remaining 85% can be done by the QIBs or any other participants. So I'm sure in the next session, Shripal would definitely talk about that as well. So, and another important thing is the corporate should dilute at least 25% of their stake. They should offer to the public at the time of IPO. And another important unique feature of this platform is that there would be a market making for mandatory market making for a period of 3 years. So what is market making? It's not really very complex subject here. Once the company files a DRHPN and IPA is over, after the allotment, it gets listed on the exchange. So from the day of listing, the stock will be available for trading in the secondary market, for trading, for buying and selling. So there would be a designated market maker whose responsibility is to continuously provide quotes on both the sides, both the buy as well as sell side, so that he ensures liquidity in the order book. That actually gives a lot of confidence to the existing as well as potential investors, because the investors who want to sell their shares and probably liquidate, the existing, the ones who are been allotted in the IPO, they can come and place their bids, because there is a counter quote which is available by the market maker to ensure liquidity all the time. And also, even the potential investors probably who have missed the IPO bus, who wants to invest in the company post listing, also will have quotes on the counter side. So the minimum bid-ask spread would also be specified, within what bid-ask spread the quotes will be there. But there is a market making that is being done for a period of 3 years. That also gives peace of mind to the corporates or to the existing investors. This is again a unique feature here, which is not there on the Mainboard platform. Even when you look at the post-listing compliances also, they are relaxed in terms of the submissions. SME need to submit half-yearly audited accounts instead of quarterly, which is the case in case of Mainboard platform. And also they need not really publish their the accounts in the print media. They can actually publish it on their website, which is again a cost saving for SMEs. Corporate governance norms are same as in case of Mainboard. There's no compromise on the corporate governance, which is very much required. We have discussed in the beginning about the migration. So SMEs can migrate to the Mainboard subject to meeting the eligibility criteria at no additional cost. I would say, we've already discussed close to 38 companies have already been migrated to the Mainboard. So after spending 2 years of time, on Emerge platform, they can actually migrate with additional eligibility criteria meeting, which we'll discuss in the next slide. So maybe Shripal can cover it in his presentation. I'm sure we'll be covering about it. Yeah, another important, unique feature one must understand is the minimum application size. Here it is 1 lakh. Unlike in case of Mainboard listing platform. So here the bids or in the IPO also have to be done in the multiples of 1 lakh, and the trading lot value is also 1 lakh. These are the differentiating factor. So when I say trading lot of value of 1 lakh means if you want to buy or you want to sell, the minimum lot size that is prescribed, it has to be, will be around close to 1 lakh and above. So this is again one of the differentiating factor from the normal board. Moving on to the next slide, we have to look at what is the process of listing or steps that a company will have to go through in terms of listing. Let me tell you, it is not that complex. Probably we have split into 7 different steps over here. I think 50% of the work is done with the fact that the corporate, the management, being okay with the concept of going public or diluting the 25% stake. What we understand is, in our most of our interactions with SMEs, we have, the first objection or the first hindrance that we see is that the management is under perception. Generally, these SMEs are closely held or family kind of businesses, so they are not open to the idea of going to the public. They don't they are not aware of the advantages that would accrue one, of being listed or accessing the public equity route. So once they are open, I think 50% of the work is done. And once they decide, they share their profiles with the exchange, with our SME team. We do the preliminary check in terms of whether the corporate is eligible for listing. Then the corporate will have to start with appointment of intermediaries. So here, intermediaries, I would say, one of the most important intermediary here is a merchant banker. Now we have Shripal representing Ariman Financial, one of the merchant bankers here. So merchant banker becomes one of the important intermediary in the whole process of Nsc Emerge listing. They are the ones who will help you in probably starting from depending upon what services that you have taken for, but opted for. But starting from corporate restructuring if that is required, and then getting the corporate governance norms, whatever, building that structure, professional corporate setup within the business, and subsequently preparing the DRHP, filing it with the exchange, or doing the due diligence and connecting with various other intermediaries such as market makers, RTA, registrar and transfer agents, bankers. So there are various other intermediaries who are there. So merchant banker takes that role of facilitating and connecting with all other intermediaries, and then starts the preparation of offer document, the DRHP that we talked about, and which gets filed with NSE. So after filing, we work on it, and then we will do the due diligence from our side, because in case of Emerge platform, there is SMEs listing. The DRHP happens, the filing happens with the exchange, not with the Sebi. So the onus is on the exchange. So the due diligence is done by the exchange. Then if we are okay with the application and the due diligence reports are good, then there is an in-principle approval that we provide to the participant, and then subsequently the IPO is announced and opened. And after the closure of IPO, post allotment, immediate listing would happen. So the corporate will be listed, and the stock would start getting traded from that day onwards in the secondary market. So this is the process, whole process, which is involved in this thing. But this is one of the sessions that we are doing where I think was part of our awareness initiatives. What we see is once the corporates are being made aware and they are open to go public, I think 50% of work is done over there itself. I think most of the time goes in mainly in terms of the promoter's readiness to dilute their stake, which is minimum 25% here. And of course, preparation of offer documents is another important area, very critical also. The risk disclosures and all, which would be part of this offer document. One has to be very transparent in disclosing all the risks that are associated. So this is one of the important areas I'm sure that Shripal would also be including in his session, in his presentation. So, offer document, I think close to 250 to 300 page document, which need to be prepared. Of course, merchant bankers again would help you assist the SMEs in preparing that document. Now, moving on to the next slide, we have to see the benefits of listing. I would say they are multifold. There are many benefits which would accrue to the corporates or SMEs who list on Emerge platform. As the names are self-explanatory, all these points, here to start with, going public or listing on the exchange, I would say, is efficient and cost-effective forms of raising capital, because equity financing lowers the debt burden, leading to lower financing costs and, of course, healthier balance sheets of the SME. For debt financing from banks, SMEs are required to commit infuse collaterals. SMEs will have to pay interest at a fixed rate and service the debt for a long period till the repayment. And irrespective of business cycles, whether the corporate is doing well or not, they have to continuously keep on servicing the debts. And also SMEs assets are also attached, subject to attachment for the recovery if at all the principal or the debt are not being paid. However, in case of equity, an investor in equity capital is like a partner, the profits and losses of the business. So here there's no compulsion to really refund the amount invested in shares. There's no obligation to pay an interest. I'm sure it's needless to mention to you, what is equity would really bring into the business. Also, investors reaps benefits if the company performs well in terms of appreciation in the value of the shares that they're holding. The equity capital has a one-time cost of raising it. If this cost is apportioned over a long period of time, then of course the cost of capital is also looks very insignificant. We talk about debt and equity capital being present in any corporate. I think both are essential. Every SME requires to kind of maintain proper certain debt and equity ratios for healthier balance sheets. The role of debt and equity are complementary actually. I need not highlight what is the issues or probably the ramifications of being over leveraged on the balance sheets. So there has to be a proper debt equity ratios that need to be maintained. So this helps there. Also, going for public issues of capital is likely to enhance the visibility of the corporate. I think this is very important, irrespective of the size of the corporate, whether it is MNC, bigger corporate or smaller corporate. For their products to sell, the company should have, or to get new customers, the company should have the visibility, should do the promotional activities. And this involves huge spends. And I think SMEs will not be able to really afford to have such funds committed for the visibility factor. However, going for the SME listing provides greater public awareness, which is gained through media coverage. Once the public the DRHP is filed, or the stock also, the sector analysts will start tracking the stock. It is available in 2 lakh plus trading terminals, and all the investors, they all would be able to kind of, it gets their attention. This can result into more diversified groups of investors being present in the company. And also a listed company is considered to secure a higher credibility ranking than an unlisted one. Once the company is listed, it is perceived as big and credible, as the company is subjected to there's a perception that, of course, this corporate is governed by a market regulator, and they are expected to be transparent. They would be doing disclosures on time. And also the entire listing process, if you see the due diligence of the company and is being done, of course, all the stakeholders or all other participants who come in touch with this corporate will assign a higher credibility score to such companies. And also listing would also give a perception. Listed company would mean they would be very transparent. They would be doing disclosures on time. So they are dealing with a trustworthy corporate. That is the impression that even the clients of that corporate listed entity would get. And increased visibility coupled with higher credibility helps the entity in adding and winning new clients. It also opens new geographies. before listing, probably you are confined to in a particular state or a particular city or a particular country, but post listing, that helps in actually expanding the horizons or the geographies or the boundaries for the corporate. Listing also helps in finding out the appropriate valuations. If a company is not listed, the value of its shares is as recorded in the books and has no yardstick or market measurement to really measure it in, fairly. However, once the company is listed, market determines the fair price, a fair value of the stock, and good performance by the company is rewarded in the increase in the share prices. I'm sure you all know how the capital markets really work. Everything, the market operates on a PE ratio basis. So good performance by the company is rewarded and vice versa. And if the company is not doing good also, it will have an impact on those share prices. So this helps the corporates in knowing the true value of the company. And if today, if you're hearing or reading it somewhere that ABC is has become or slipped from second richest to third richest or moved up from 8th rank to 9th rank, it doesn't mean that their cash in bank or the balances have increased, but it's the value of their shares that they're holding actually gives them those valuations. Basically, these are listed shares that I'm talking about. As part of process of listing, SMEs are required to adopt the norms of corporate governance, which is again aimed to at ensuring the transparency and fair conduct will also benefit the company in long run. We talked about migration to the main board. So Nsc Emerge Platform is also considered as a stepping stone for many SMEs to emerge on the bigger platform, on the Mainboard platform. So corporates, after spending 2 years of time on Emerge platform and having a paid up capital value between 10 to 25 crores and market cap of about 25 crores, are eligible to migrate to the Mainboard platform, subject to meeting the other eligibility criteria. So also, once listing on Emerge, they gain the experience in terms of regulatory environment, how it actually, all the disclosures work, being on this environment for 2 years, how the submissions or the compliances, etc., are done on the Emerge platform. This all will help them in gaining that experience of being listed. And also it is relatively less expensive for corporates to list on Emerge platform than migrate to the main board rather than probably going directly to main board. One we have said, of course, the eligibility criteria of directly going into the Mainboard platform and also the associated costs. So moving on to the next benefits, yeah, we have already discussed about liquidity for shareholders. There is a market maker being present, so there is a liquidity that is there, and also since you are tapping the equity from public, so each of the investors will come with a different time span and time horizon of investing. So that gives liquidity to the shareholders, to the existing as well as potential shareholders. The borrowing terms also would help once the company lists. So listing on Emerge benefits in terms of having a favorable borrowing terms from the banks for their loans from banks. We have corporates, we have examples who could really renegotiate on the rates on their loans, being listed as they are considered as credible organizations. And also listing helps in the process of listing, additional capital is infused into the business that also helps in increasing the lending limits by banks. Listing also helps or acts helps greatly in case of mergers and acquisitions. Once listed, shares take the form of currency for mergers and acquisitions without affecting the actual cash flows. If people are planning to do any mergers or acquisitions, they simply can work out on the ratio of exchange between those two companies. So without really impacting the cash flow, there is again a big advantage. I would say then another bigger advantage could be, I think, one of the major challenges that SMEs face is in terms of attracting and retaining the talent pool. So once the company is listed, the company can offer ESOPs to performing employees to retain them as incentives, and without having an impact on their cash flows actually. And also it helps in attracting new talent into the company once it is listed. Once a company listed, they take, appropriate valuations are being kind of attached by the market forces, and your shares or the SME, the corporate shares actually take the form of collateral for further borrowing from banks. So they become collateral once it is listed. And like I've already said, you get access to wider capital because with different time horizons, investors do come into the business. That also helps to a great extent. Moving on to the next slide, what are the various initiatives that at NSC that we take, what we've understood. Abhishek, if you can just move on to the next slide. So our learnings so far in our interactions have been that awareness is lacking to a great extent amongst SMEs. This platform has been there for almost 8 years, and then we have close to 210 stocks which are listed. I would say 70 to 80% of those stocks listing happened in last 3-4 years. The first 4-5 years have been only probably, I think, some 30 odd companies which got listed. So we see awareness is one important thing, and also the readiness of the corporates. Once they understand, they're open, and also they work on their corporate restructuring, getting ready for IPO. That takes time. So we do a lot of awareness sessions jointly with the various professional bodies, industrial associations, clusters, and then we also do meetings with focus groups. And we also have strategic tie-ups with government bodies. We have tie-ups with various state governments to actually to float some schemes which will aid or which will encourage these corporates to come up with IPOs. Some of the state governments have created funds to participate in these IPOs of SMEs. Some of the state governments have also are sponsoring some part of their expenses in this entire process of listing. And we also act as as a strategy role. We provide inputs to the regulators on development of this particular segment by taking the inputs from various bodies. Yeah, Abhishek. Next. So now, what is in it there for you as professionals or being chartered accountants here is, I would say it's whatever that you have been doing so far. These are additional opportunities, assignments which you can take up. There's IPO consultation services that you can give both pre as well as during the IPO phases. Pre-IPO in terms of valuations of, you can help them in the valuations. You can become the introducer to a merchant banker or connecting them to various intermediaries in this entire journey. You can also have association in terms of building up their corporate governance structure. As part of SME listing, they need to adopt the corporate governance norms and standard, the restructuring. They should have a professional organizational structure. So there are roles to take up to become CFOs, which is also required there. And also, there's an opportunity to become the investor also if you think that your client who is a potential SME who can come on this platform, you can become you also have the opportunity of being investors and grow with your clients. It's a win-win situation for both your client as well as you. And there are other various services which you can take up. I think probably Shripal would have some of them in his covered in some of his slides. So overall, I would say as chartered accountants, you have a major role to play in shaping up and helping your clients during these challenging times. I'm sure whatever that we have understood or the presentation that we have learned in terms of eligibility criteria or the stage or the company, which SME should really consider themselves listing on this platform. You would have got a fair idea, or you would have some names. You can advise them, you can help them, you can add value to them in whatever forms that you can do. So there is a need to create awareness there, being advisors and guiders to them in this platform. So that brings to the end of my presentation, and I would like to conclude my presentation or my session here by saying that here is a platform which is created exclusively for small and medium enterprises to benefit them to raise equity capital from public. So the sources of funds actually have widened. What is required is creation of awareness amongst SMEs, and you as chartered accountants being important influencers in the entire ecosystem have a major role to really play. So thanks a lot. Thank you very much for patiently hearing to.
Thank you, Gauri. But there are two questions which, if you can answer, then it will be free flow for Sripal. Like the first question is from Mr. M.T. Srinivas Rao, very senior member with us. Okay, and thank you, Srinivas Rao, sir. Will there be any concessions to Nsc Emerge listed companies in compliance of Sebi regulations?
Well, first of all, thank you for asking that question, Srinivas Garu. Here, I would say there is a relaxation in terms of compliance requirements, in terms of submissions. We discussed companies, corporates will have to do half-year on submissions based on half-yearly instead of a quarterly in case of Mainboard. And also there is one more relaxation in terms of the spend that they will have to really do on publishing these in the print media. Instead, they can actually publish it on their website itself. So there is another relaxation. So these are two immediate points which are coming to my mind as of now. I hope I've answered your query. And
then can a BSc listed SME company migrate to a Nsc Emerge?
Sir, I think that is as of now. That is we don't have any such companies. We just need to check with the compliance requirements there. But I think there is some regulation which doesn't permit as of now. But I can get back on that.
Thank you, Gauri sir. Thank you. It was very done with a lot of clarity. And I'm sure many people would start thinking on these lines now. So Sripal bhai, over to you. I think you can, now the floor is all yours. I should say the screen is all yours.
Hi, sir. Thank you very much. Thank you, Gauri ji. I think you have covered a substantial amount of points. I'm sure my PPT will have a lot of repetition, so I'll scroll through them a little faster so that we can directly go to the Q&A. I'll just share that.
Share screen pe up. You can just open the PPT there and click on share screen. Green wale pe.
Yeah. Just give me a second. One.
Please take your time. Not a Can I be of small help to you, Sripal? 2 मिनट में जूम मिनिमाइज नहीं कर सकते, पूरा मिनिमम आल्ट टैब यूज करके आप पॉजिटिव. या परफेक्ट. स्लाइड शो कर दीजिए. राइट.
Yeah. Hi. Thank you so much. So, those who are, most of us who are listening to this are chartered accountants. So, a lot of concepts have been covered by Abhishek Ji's NSC team, Gauri Shankar ji. Now, I'll just scroll through whatever I think has not been covered yet. So, we can start. Ultimately, these are the 5 main points on what we have to convince a corporate of why should he look at getting listed on the stock exchange. Because that is the first question any corporate will ask the chartered accountant who is pitching the idea. First point we need to explain is price discovery. Now, what is price discovery? It's not really just that you made a valuation report in an Excel sheet and that becomes the gospel truth of the company. It's not true. Because if that was the case, everyday prices would not fluctuate. They would fluctuate only once in 6 months or once in 3 months, a result is announced. So price discovery means in any place, once something is listed on a market, over a period of 2 years or 3 years, while it is on the SME platform, its real price gets discovered based on demand and supply mechanism. Today, if I live in a particular flat, what is the price of my flat? It could be anything. But if my neighbor has sold a flat for 5 crores, then value of my flat is around 5 based on the demand supply last traded price concept. So why anybody should get listed is that the confusion of what is the real value of his company will get cleared over the span of these 2 or 3 years. Second benefit is wealth multiplication, which leads to a level playing field for promoters. Now, what do I mean by level playing field is that as the slide earlier in the Nsc Emerge, they were trying to explain that which kind of company should go for an SME listing. And they were very much right in saying that the company which is ready for a private equity, that company should go for SME listing. It is a correctly identified, that is the company. So they have finished the initial promoter round, they finished maybe a venture round, and now they are looking at private equity. When you go for private equity, what ultimately happens is that you're an unlisted company in which a large, rich investor invests money. A private equity fund is a very rich investor. So the level playing field is not there. The promoter is very poor compared to the investor because the promoter's source of income is his salary, which he will take from the company 99% of the times. Okay. So what happens is once the company grows, the company requires more capital. When they require more capital, there is a crossroad that who will bring this second round, third round, fourth round. Promoters can't bring it because promoters have already put whatever they had to put. So the only way for them to grow further, the private equity person knows very well that they will have to grow through my only money. And in that way, over time, the stake of the promoter reduces and stake of the private equity investors increases. But what happens in a listed company? In a listed company, there is a concept of price rise, price fall. There is a concept of bull market and bear market. So a good promoter or a good company should be able to identify at what stage to raise funds and what stage to buy back the shares. Because in a listed company, even if the company is very good, because of market sentiment, sometimes the prices go below its fair value. Once it has gone below its fair value, a good promoter should be able to identify with a good merchant banker like me that this is the time to do a rights issue so that the promoter's shares can once again be made at a fair price. And when there is a heavy bull market, you can look at again offloading those shares. In that way, what happens is that the wealth multiplies for the promoter. It allows the promoter to continue to own the company and still not have somebody who is controlling the company and still raise capital. This is the benefit of a stock exchange. This is the only place where something like this can happen. In the unlisted private equity space, this cannot happen. What can happen is that your company, which is a 10 crore company, can become a 1,000 crore company. And you are, even if you are 10% or 2% shareholder, your valuation is very good. But ultimately, you are not the owner at the end of the whole thing. You become a professional shareholder plus executive director kind of role. So the minute things go a little south, you're out. But in a listed company, I have seen that the families who own companies can own companies despite their holdings being very low, because the remaining holdings are scattered. So that's why wealth multiplies for the promoter. Third point is easy access to capital. Now, what is easy access? So, for example, when you have a sanctioned CC facility with a bank, you know that overnight you can take that money from the bank. There is not much question answer on it. But now you have finished your CC facility and you suddenly need overnight money. What do? As a listed company owner, as a promoter who has got his shares listed, he has a huge collateral in form of the promoter equity. Most of the times, average 70% of the company is owned by the promoter. That 70% value can be pledged with a financer like me or with a financer in the market, and overnight you can raise that capital because that collateral is listed and it has certain value. If it is unlisted, it has no pledgeable value. No NBFCs will look at it. But if it's a listed, any NBFC will give some offer. And when you need money suddenly, the best way is to be able to pledge something and take it, so that that opportunity does not go away. So that's why it provides a very easy access to capital. Fourth benefit is tax benefits. So I'm a company where the promoter family has reached a certain age and the second generation is not participating or may not be participating. 99% of the time, that company is going to sell out the business over time. The promoters are going to exit. If you exit as an unlisted company, you end up paying tax in the highest bracket, which is 20%, 25%. But if you exit as a listed co, you get benefits of only 10%, which is the long-term capital gain tax rate as of today. That's a major benefit, because even if the company is valued 100 crore and you save 10%, you have saved 10 crore. And last but not the least is visibility benefits, which lead to strategic partnerships. So for this, I can give you an example. There was a company which we listed. It was a company in the business of telecom towers and telecom service providing. What happened is, someday somebody called up us that, Shripal, he's somebody from the stock market. He called me saying, this is your client, I want to talk to him. I said, what happened? He said, sir, there is an opportunity. Reliance Jio is planning to enter, and they are going to do tenders for small entrepreneurs who are giving this service. They don't want to work with the large entrepreneurs because they want to keep it secret. Okay, so you send your guy. There is a business opportunity. We went and did the meeting with the Jio team. When he came back very depressed, because we realized we needed 10 crore bank guarantee, which we can't give. The investor who gave this opportunity of business said, you don't worry, I'll give you the bank guarantee also. So what happened is, he found the opportunity. He found the opportunity how my company can grow, and he gave the finance. This would not have been possible if this company was not listed, because it would not be visible. The smartest brains in our country are people who invest in stocks in the stock exchange. You can say that, one of the smartest brains. So they know what is happening sometimes better than somebody who's running that industry, or sometimes somebody who is running that business. So it's like you're putting your product on the shelf. अगर आप पतंजलि का मैगी नेस्ले की मैगी के बाजू में नहीं रखेंगे, if you don't keep it next to that Maggi, how do you know whether people are buying that noodles? So getting listed is like putting yourself on the shelf. The best people can see you, and they can themselves identify that this is a company which can grow. So visibility brings strategic partnerships. So these are the 5 core reasons why a client should get listed. This is just a small slide to give an idea that currently the top 10 richest people in the world are all owners of a listed company. There's not a single person over here who is an unlisted company owner. Now, what is the difference between main board and SME board? I've written the eligibility criteria in detail here. Main thing is that there is a 15 crore operating profit requirement on the main board, which most of the companies who we as chartered accountants or we as consultants deal with at our level don't qualify for the 15 crore operating profit 3 full years, which is why they become eligible only for the SME platform. Now, the requirement of going to Sebi is there on the main board. On the SME platform, they have given a relaxation here. You just have to file with Sebi. There is no permission or approval letter required. Number of investors, 1,000 investors are required on the main board. Only 50 investors are required on the SME platform. Now there is a difference of minimum investable lot, which I think even Gauri Shankar ji has explained. that the trading in SME happens in lot size above 1 lakh. On the main board, you can buy 1 share, 2 share, 5 share. But that I see as a benefit, because what happens with those 1111 shareholders, I'm sure everybody who has run a listed company or considered a listed company will know that it creates those single shareholders who come to your AGM and they can harass you. It does happen in the real world. Here that cannot be possible. You get 3-4 years of good high net worth individuals who are not here to harass, who are here to question and answer and add value. So unless you're investing 1 lakh, you have no right to question. So it insulates the owner of a listed company from those kind of people. And last is that on the main board, there is no compulsory underwriting and there is no market making. On the SME board, market making is compulsory, which means that post listing, you have to appoint a stockbroker who will provide liquidity on the counter officially, and you can pay him official fees to do so. These are just statistics of how many companies have got listed. I think it was covered in the Nsc presentation. Main thing to know is that in this, around 30,000 crore worth of market cap has been created using both the SME platforms till date. And out of that 30,000 crore, Aryaman alone is responsible for the 9,200 crore market cap, which is, you can say that almost 1/3 of the total market cap is only our companies. We believe we are one of the best performing SME merchant banker, and we are very good because if you see the growth in market cap of our companies is 232% post listing, and the second highest peer is at 43%, and the third peer is at 1%. That is the gap between us and the remaining with respect to post listing performance of our companies. The global experience of SME exchanges, this is something that is very, very popular globally. In India, it started in 2012. In fact, we were the first merchant banker to list a company on the SME platform, albeit it was on BSE. And then NSE, I think after 3 or 4 months, NSE exchange also started. But since then, NSE has taken a much faster speed and grown at a faster pace. But as you can see, AIMS London has done 3,865 companies. We have done only 600, 500 companies till date. The GEM exchange in Hong Kong, there is an exchange in Tokyo called Mothers, and there is an exchange in Singapore called Catalyst. So this is something that globally speaking, it is going to grow. In fact, there's one more thing that I want to note down. If you refer to the slide, I'll go back. Okay. This slide, if you see this slide, there are almost 6 out of these top 10 are people who are listed on the NASDAQ platform. Now, for those who don't know, NASDAQ when originally started, it started with the same concept of market maker compulsory. It was a separate exchange, even though New York Stock Exchange was already existing. Still, they launched a separate exchange because they realized they need some kind of an exchange for tech companies who are growing stage, who need a easy listing platform. The norms for getting listed on NASDAQ were similar to the norms which are now, where there was no SEC permission required at that stage. So in a way, NASDAQ is like an SME exchange, but only for tech companies. So you can see that the top 10 are those who originally got listed on NASDAQ. Many of these companies, when they got listed on NASDAQ, their market cap were in some few thousands of crores, which are now in billions and trillions. Now, how do we do it? What is the process? Process is you have to appoint a merchant banker. Let's say that is the day you sign a mandate, is your T day. The first 5 to 20 days is your tentative valuation, justification of how we are going to be eligible, creation of the entire pitch book on what we are going to be presenting to an investor, how do we plan to target an investor, what are the viabilities on what price we should bring an issue, and the final capital structure creation. These things are what I consider an initial stage. At this stage, it is possible that a mandate is signed with us, and within 20 days, we realize, okay, the company is me and the company, or the company and us are not agreeing on valuation, are not agreeing on dilution. And at this stage, we can decide to once again put it a pause, where we go back to the drawing table. The promoter does things that are required to be done, and we restart the process from here once we have bridged the gap of valuation. After this, then there is immediately you start the process of filing the offer document, which is another 1 month, wherein we just create the entire DRHP, because now in ideally speaking, on the main board and other places, how it works is that the full DRHP is made by law firms and the merchant bankers do the vetting. But in SME, since we're looking at a low cost listing platform, we're looking at saving money, the entire process is done by the merchant bankers and the lawyers do the vetting. It is the other way around, but that makes the process much faster. And in another T plus 45, approximately 1.5 months, we are ready to file the offer document. After which we go for the stock exchange permission. So I've assumed a 1 month period for them to give us the permission. And after that, another 10-15 days to get the ROC approval. So which means by the 4th month of you signing a mandate, you should be ready to get the IPO out. This is the ideal timeline. Having said that, the T plus 20 stage, which is the first stage, on that stage, we can always agree to disagree on valuation. And then we can keep looking at other investment opportunities till we all agree on valuation, because we should not file a document and then argue on valuation. That is not the right way. Right way is to complete valuation, complete the entire exercise of who will be investing, get a little background of whether it is viable, not viable. So we can give you our judgment. The promoter can get his own judgment based on his circle, and then we go ahead and start writing the offer. What is due diligence? Many times promoters may ask you. So we have made a slide. We'll be sharing the slide with you. Primarily, it is broken up into 6 parts. People due diligence, which is your management. Legal due diligence, which is your litigations and government approvals. Financial due diligence, which is your entire re-audit for last 3 years. And secretarial due diligence, which is company secretary compliance. And last is the business model related, how you're drafting the risk factors section. These are your core breakup of the how we finish the due diligence process. Just want to go through some of our key stories so that the members here can get an idea of what kind of growth these companies have seen. So that company example which we were giving, which became a customer to Jio, thanks to a lead coming from the market investor. This is a company which we brought in January 2014 at an issue price of 25 rupees with a market cap of only 16 crores. And when we met them, their profit was around 1 crore. Today, this company has a market cap of 367 crore and it has a profit after tax of 33 crores. This is a multi-fold increase in market cap as well as multi-fold increase in its profitability. And it is a highly cash-rich company which has now become an investor with us and does not require any funds further. It doesn't raise funds. Despite all our pitching, it does not do any more equity issuances. This is another company, Vishal Fabrics. This company, also similar company, they have a very large, one of the largest processing textile companies in Gujarat. When we listed them at a price of 45, they had a market cap of around 60 crores. Today, it's a 1200 crore plus market cap company with a 30 crore plus profit. So these are the kind of growths these companies have seen thanks to our mentoring, our ability to get the right process from the SME listing point of view. Valiant Organics, this is one of the most successful SME listed companies. This is a company in which Reliance Mutual Fund, I think a few more mutual funds, Edelweiss, have invested at the IPO stage. This is a company when we brought around 80-85 crore market cap company. This is a 3,500 crore market cap company today with a profit fold of more than 14 times from its pre-IPO stage. Then another company we have brought on the Nsc Emerge. This is Tembo Global. When we listed 30-35 crore market cap, today within 2 years it is 90 crore market cap company. And this coming year there is a German-based venture fund which is planning to invest in form of debt in the company, and over time it can become equity. GK Wires, this is a company we listed on the Nsc Emerge platform. I think 33 rupees has now 92 crore market cap. So there has been a growth of 167% in its pricing as well as almost 900% in its profitability. Apart from SME, we have, as a merchant banker, as we started maturing over 2012 till 2016-17, we started venturing into mainboard IPOs because a lot of the clients which started sending us balance sheets were eligible companies like having 15 crore plus operating profits. So we did an IPO called Apollo Microsystem. This is from Hyderabad. It was the most successful small cap, mid cap mainboard IPO in the history of India. It was a 156 crore IPO which collected more than 200 times subscription on its listing, with approximately who's who of the mutual fund industry wanting to participate and participated. Then we did one more mainboard IPO called Carda Construction, which was a 78 crore mainboard IPO, very heavily appreciated, and the price has done really well post listing too. And recently, last year, we did Vishwaraj Sugar Industries, which is from Karnataka, which is also a mainboard IPO. So we are eligible and we are capable of managing mainboard IPOs too. So as chartered accountants, if there are clients who are meeting the eligibility criteria of 15 crore operating profit, we can definitely look at mainboard transactions too. We have recently filed 2 more mainboard IPOs. One is Parkside Homes Jaikumar and Satya Sai Pressure Vessels, both of which have received their Sebi clearances, and as and when market situation allows, we will be opening these issues shortly. Yeah, so if there are, I think, any questions, I would be glad to take them.
As of now, though, questions are not there because people must be still calculating the amount of money involved here. Seriously. Friends, any questions, you can just now put it in Q&A so that we can request the speaker to answer.
Chairman, one question from my side.
Yeah, please, please. You're all a money man here.
It's for a Gauri sir. Sir, while bill discounting or bill factoring, is specific conditions, something like that, specific sector or any criteria of net worth or turnover or something like that?
Once you are there on this platform, then there is no such criteria.
Okay.
In terms of this is going to be the rate of interest, or this is the rate at which it's going to be discounted. It is all driven by the market forces, and it will be more in line with what is being practiced, or it will be in sync with what is there outside, when you are dealing with a bank. But here, the advantage is that there is a presence of many financiers at one go, and everybody would be basically competing to give you a better bids. So, and then you have the flexibility also to choose it at one go. So that is one important benefit I would see in this platform.
Generally, what may be the time, sir? Turnaround time for this factoring?
So once the seller uploads the bills on this platform, which is an SME here, then the buyer accepts that invoice. Then it is presented to all the financiers to give their bids. At what rate is that, at what best that they can kind of factor in those bills or discount those bills and then release the proceedings. So once it is accepted, it takes just 48 hours where, the money will be realized by the sellers.
Thank you. Thank you, Gauri.
Generally, if some of the companies are having limits against debtors, exact ad hoc limit against debtors, will it not be a problem that my same debtors are pledged to bank? And again, is there a possibility like that? Or
sir, if you can just elaborate on your question.
1 second. I have the working capital limits,
Okay.
which is based on sundry debtors also.
Okay.
So now I just submit the list of my debtors to bank, and based on that, some limits are sanctioned to me.
Okay.
So now again, if I do this, will it be a problem?
Yeah, double finance.
So here there are two things. First of all, the seller is actually uploading the invoice. So when he is uploading the invoice, he actually complies to whatever the requirements of this platform in terms of, when if it is the same bank which is also there on this platform, it is already accounted. Otherwise, the onus is on the seller always. But this particular bill is getting accepted by the buyer as well. So both of them are aware. And as far as accounting treatment is concerned, in terms of disclosing it to the banks outside this system, that need to be checked in terms of what exactly the regulation says. But since the buyer as well as seller agree to this and they are aware, the moment it gets discounted, and I think they won't stand there as debtors, because the moment it is factored in, the onus of repaying that is always with the buyer. So here in this book, ideally it should not be there as standing as debtors also, because it's already discounted. He has paid and got a discounted amount.
Yes.
So that should not be appearing there, is my view.
Yes, some two questions have come quickly. I'll take it. I leave it to you or Shreyash, whoever wants to answer. Sripalji, what is the approximate expenditure for SME to get listed and bring its IPO? Further, do they get subscription with the help of? Do they get subscription only with the help of merchant bankers?
Yeah, hi. So the approximate expense for getting listed on the SME Emerge platform would be anywhere between maybe 40 to 50 lakhs, plus or minus 5 to 10% of the issue size. So depending on how we are marketing the issue, as well as depending on at what price you're bringing. So if let us understand it in a process point of view, how it works is that the chartered accountant and the merchant banker, once we sit with the balance sheets of the client, we can do an initial recce on what kind of value we can bring. Okay. Not only this, many a times the promoters have a very good goodwill in their business. So they have stakeholders in form of vendors, in form of well-wishers, relatives, who can give much higher valuation to the company because the trust factor has already been built with that person. And the stock exchange works in the form of a catalyst to give exit to those investors maybe after 2 years once they migrate. If that is the case, your cost of listing is very low because you're not relying on marketing expenses at all. You're not marketing the issue. You're in fact just bringing the issue, doing your statutory advertisements, allowing those who want to invest fairly, but you already have your own circle, you have your own tied up people who trust you. So they are able to give you a higher valuation. Let's say, so that is one type of company. Second type of company is which does not enjoy a very strong goodwill or is unable to get people to come and invest in form of HNI support. In that case, you are marketing the full issue to retailers or to HNI investors. In that case, your marketing costs can go between 5 to 10% of the size of the issue. Otherwise, the listing cost per se is fixed at 40 to 50 lakhs.
I hope that answers the question of Anil Agarwal. And the next question I am taking is from Umesh Rati. We are using Treads platform already, but we are getting bids from only 2 or 3 banks. We are BBB plus rated company. Is it because of the rating that bankers are not bidding, or could there be any other reason?
There are more financials on this. We need to actually look into the technical details of what exactly is coming. Probably since it's a technical question, RXIL team who actually looks into the operational aspects of it will be able to kind of, I think, be able to answer it better. We will. Is it okay if we get these answers from RXL and then share it with you so that you can share it with the participant?
Yeah, definitely. You have our mail ID, or you can just share it with Mr. Abhishek. You can just share it back to us.
Sure.
We can definitely do that, sir.
Else, Abhishek, I think we can share the coordinates of our RXL Hyderabad counterparts, AP counterparts, so that actually.
Because
we can arrange for a call. We can arrange for a call with our RXL AP counterparts.
See, today what happened is the number what we had was less, but I think I never seen a more dedicated, frankly, attendees to you. And exactly the number got just stuck as if but everyone has come to only listen to you. They're very attentive. Otherwise, unlike every time, we didn't add unnecessary chats. In fact, I should thank them. And if the panelists can share your details with them, with us, it would be great. You can just put your details in chat, or if you allow us, based on, we can just mail it to us and we can even mail it back.
Certainly, sir.
Yeah, and also I'd like to request both Abhishek and Sripalji that we have the recording of this, which we'll be sharing it in our website. And definitely, we are very soon celebrating the 100th program of the new committee. It's in a big way where all the videos will be now publicized and placed in a better way. So that way, more and more people, once this talk comes out, they can see from the site. Okay. So this is one permission I had, and I also request both of you to share the PPTs. The GST audit time is fast approaching, and you would understand that we don't have articles because exams are also there, containment is there, and there are number of reasons for students not to attend the office. So because of all this, maybe I'm unable to get more people at this time, but definitely people will take advantage of the PPT and the recording and they'll see it. And Sripal Bhai has shared the details in chat. I think Abhishek ji can share the details of Gauri sir also so that we can do it. Machar, over to you if you are to.
Yeah. Thank you, Chairman. And a small this thing I asked before this thing itself. What about the professional opportunities, sir, in both Gauri sir and Sripal? What is the advantages for a chartered accountant in the capital market areas?
Yeah. Can I go first?
Yeah, please.
Sir, I believe that chartered accountants are most important when it comes to a listing of a company, because it's like a one-time only decision. Okay, you can't reverse this decision. Most of the time, you cannot reverse it. So a lot of clients have a lot of negative views on it, as well as they have some misconceptions also on it. And what happens is people like us who are from the merchant banking fraternity, fortunately or unfortunately, we are not trusted. Okay, because we ultimately come from stock markets, and people have stories of all kinds of experiences of stock market individuals or professionals. It's a good thing and a bad thing both. So what we need is we need a healthy relationship first with the chartered accountant. Likewise, a lot of companies have duped a lot of people in the stock market, both ways. Okay, so unless the chartered accountant and the merchant banker are able to get on a same wavelength, are able to understand the long-term vision of the company jointly, only then a good successful SME listing happens. Many a times in my experience, out of the 65 companies I have done, wherever the chartered accountant or the merchant banker are not on the same plate, it creates not a very good listed company. Reason being that ultimately, especially in Hyderabad, I have seen promoters give the final veto to your chartered accountant or your company secretary, whoever has a stronger impact on the company's history. I have seen this is a unique thing in Hyderabad that the promoters will behave almost like a peon and the chartered accountant will become a CEO, especially during the listing process. Whether I mean, jokes apart, but what happens is the promoter will sit on the left hand side and say, sir, you convince him. If he is convinced, we are convinced. We don't want to get into this of taking a decision, which is why chartered accountants are very critical. Now coming to what is the benefit to the chartered accountant? Why should he get into this game? Sir, what happens is that a company cannot grow without capital. This is a fact. Today, debt is very difficult to raise. Banks are almost squeezing every penny of collateral available, and they have become heavily risk averse. This is a fact. It's a cycle. They become very, very aggressive. Then a lot of NPAs happen. Then they become very, very regressive. Then economies don't do well. Then again they become aggressive. This is going to go on and on till God's ears, till maybe somebody does something. Currently, for the next 2-3 years, I see bankers being extremely regressive, extremely non-aggressive with respect to their lending. So if a company would want to grow, they have no choice but to go with capital in some form, private equity, venture capital, SME platform. So a chartered accountant needs to have this service in his office. Otherwise, they will change the chartered accountant.
Yeah, that's what.
Okay, it is a battle for survival for a chartered accountant, in my opinion. If another CA firm has a very good SME practice and he brings that capital, chances are he will take the audit, he will take the taxation, he will take everything. That is a given. Because Joe, it's all about the money, honey, as sir already said in the start. So primary reason is not what is the benefit to the chartered accountant. It's a battle for survival. If you don't build this practice of SME listing, you will be missing out on a lot of good clients. Plus, you will not be able to get the benefit of their growth. You may continue as auditors, but the benefit of the growth will not come, as audit fees and things like that are pretty stable but not very high growing, high revenue generating, high margin items from a professional point of view. But an SME listing is an extremely high margin item, because not only do we share fees between the merchant banking unit and the chartered accountancy firm, it's like selling a gun. They will need bullets. Okay. So from a chartered accountant point of view, post listing, continuously your services are needed more and more, because the company moves towards higher professionalism, from just a tax planning method or just 1 year audit concept to a higher professional field where they need to make monthly investor presentations. Maybe they need to do updation of their accounts much faster. They need a stronger team to support them. And with this, over time, your chartered accountant services do increase. Second is, a lot of chartered accountants have practice of investment also, where they are guiding their rich clients to give money to their needed clients, not poor, but needed clients. They can really act as a bridge in this case. The SME exchange can help them root these finances which are already getting rooted in form of a proper structured way, whereby the growth in a small company can be beneficial to the investor who you, and if the company does not grow, at least the shares are listed, you can get some exit. Today, a lot of chartered accountants are facing a problem that whatever money they raised for their needed is stuck. COVID, nobody is repaying any loans, nobody is calling, picking up the call also. But if it is a listed co, at least you can exit at some price. So building a SME practice along with a partner like us is critical to a CFO. You will earn money at the stage of bringing the IPO. You will earn post-listing in form of fees. Also, last but not the least, there is a huge amount of investment gain possible if the companies are done in a planned manner, like I showed in some of my examples. So to again give it to you, we have done total 800 crore worth of SME work from a listing point of view, but the value of that is almost 4,000, 3,000 crore today. Okay, so anybody who would have invested in all IPOs of SME of Aryaman would have done 4 times of its capital. So if you were to partner with us, surely that benefit also comes in. Thank you.
I think Gauri sir, your take.
I think Shripal has very candidly put, I also highlighted the significance or the role that CAs have to play in SME side. If I have to add a bit, I think at the pre-IPO stage, in terms of pre-IPO assistance itself, where the corporate has to realign their financials to be ready to get listed or to file a DRHP. So the engagement that could be there on the realigning the financials, probably, like Shripal has mentioned, only right now you may be advising them from tax saving angle. Here's something where the approach will be completely different while you realign the financials, because everything valuations are generally done at PE multiples. Then of course there is a restructuring and consolidation of business also that happens if the corporate is not completely ready, because it had to be converted into a public limited company, even if it is a partnership or a private limited company that need to be converted into public limited before going. So in that restructuring or consolidation or probably merging to subsidiaries or on all those engagements, you can get newer assignments. Also, as part of the corporate structure that these SMEs need to bring in, they need to appoint independent. You can be the independent directors, or you can assume the role of a CFO there, because they need to have it as part of their corporate restructuring. You can also get assignments in terms of valuation of those companies, because end of the day, merchant bankers would have their own understanding, corporate would have their own understanding. You can help both the parties, or understand each other's perspective, give right valuations in terms of if there is a disagreement between the corporate and probably the merchant banker, you could be taking the side of the corporate and probably try and convince the merchant banker, or probably could be the bridge, or would be able to help them in their valuations. And also you can help them in building systems and processes which are compliant with the regulators requirements. And there is also requirement of peer review audits that need to be done. So There is another opportunity, like Shripal has mentioned, identifying IPO clients. So that also could be, through your connects, one may be having funds, or maybe one need them. It's basically, helping them in their road shows. That is another opportunity that is there. Even when we look at post IPO, like Shripal also rightly mentioned, it's a perpetual thing, because the entity is an ongoing. So you can offer, you can have assignments where you will have a continuous engagement in terms of the helping them in meeting their compliance requirements, internal and statutory audits. There's a new whole lot of services that gets, opportunities that gets opened up once the company gets listed. Probably doing quarterly reviews, statutory, regulatory compliance certifications, and along with that, like I said, directorship, holding a directorship post, it gets listed. All these are a whole lot of opportunities. Along with probably being a potential investor in those companies, if you think that the corporate is solid and fundamentals are good, and you believe in the management. So there is a whole lot of opportunities that are there in diversified areas, I would say. And over and above that, if you are already having an existing client, I think you can add value to them by being, you can actually retain the client with you for even more years, even if you're not taking up any of these opportunities. At least, you will be a good guide and probably a good advisor for him, for his own benefit. End of the day, it is your client, and you're helping them in, deriving the value.
Thank you, sir. Fantastic. Thank you so much. Chairman, sir, any? Unmute.
Sorry. Thank you, both of you. There's one question from V. Chaitanya. I think it's better because your people answered. Typically in the life cycle, is there any thumb rule in terms of a certain period of operations and achieving a particular business volume before planning for a listing?
Yeah, I think it's a good question, Chaitanya ji. So how we see it is that there is no benchmark for certain amount of sales or certain amount of profits. But what we do look at is sustainability of a company. Because if it is unable to sustain maybe 6-7 months of a lockdown, to give you an example, then it's not ready for an SME listing. So what we basically look at is its ability to generate operating cash flows. If it is an operating cash flow positive company, it should look at an SME listing. If it is operating cash flow negative, and as long as there is an explanation to how it becomes operating cash flow positive, these two kind of companies should ultimately come. Because what happens is, it's an initially costly process. You're spending money before you get the money. If for some reason there is an accident or the markets are not conducive and we have to wait for 6 months, 8 months, it should not be that these expenses create a big enough dent for the company's survival or sustenance. So what we are looking at is any companies which are having a profit of 1 crore plus, or maybe even 75 lakh plus, which is a genuine operating annual profit, should look at listing. Turnover is not a criteria because we are not a bank. We are not giving any CC facilities. Criteria is primarily profit before tax, or operating profits to be precise, which is around 75 lakh to 1 crore, then they should look at this. If it is lower than this, then definitely, unless there is a substantial reason for why they want to go, there is some plan which makes it in such a way that currently it is very small, but the opportunity in hand overnight converts the company, there is some opportunity like that, then we can definitely look at those. But prima facie, the question answer is that it should be 75 lakh to 1 crore profitable.
Sripalji, just one question before we close it, because we are running out of time.
Sure.
You are a merchant banker, and you must be also involved in valuation of shares and all, especially with respect to this ESOPs and even other income tax related valuations.
Yes.
So basically, I'm not sure. Do you have any experiences which you'd like to share with us, or at any point think that if this could have been done better, maybe things should have been easier to handle, or some experiences like that? Do you have?
Mean from a listing point of view?
Yeah, no, not, I'm talking about the valuation point of view, which the merchant banker has to give share values for ESOPs or for any other things. Are you into that or you're not into that?
Very much. So we have a valuation practice. Almost more than 100 chartered accountants have tied up with us, and we are sharing valuation work with each other, because in some cases my clients don't require a merchant banker valuation, they need a registered valuer where you have to go to the CFO. And in some cases they need a, for an income tax purpose or for RBI purpose, you require merchant banker compulsory. That practice does exist in the firm. Prima facie, sir, I don't look at that practice, so I don't know the nuances of what happens. My VP may be able to answer better. And what you're trying to ask is that if the method of valuation could have been changed, is that what you're asking?
No, no. Is the methodology being where, like, I come to you with a valuation, maybe I come to you with a last date, I come to you with something what you want, I'm not providing, or you look at us in giving you the information in a particular way, but I'm bringing it in a different way. Is something like that happening? Because it's my first hand discussion with a merchant banker, and now this concept is picking up a last. So I thought, can we make it easy for the members?
Sir, what we have, one of the things that yes, we have noticed is, since this new concept of valuations have become in vogue and a lot of valuations are happening because of regulatory requirements, what we are seeing is that the discounted cash flow method, the DCF method, is heavily debatable method. Everything is right and everything is wrong when it comes to how you value a company using DCF method. So normally how merchant bankers differ when chartered accountants send their initial value is that the comparable companies are not found correctly. To justify your beta or to justify your weighted average cost of capital, you need comparable companies. Your comparable companies are better found using a banker, because we are in the business of finding comparable companies, being able to analyze apple to apple. A lot of times CA firms are not able to get that right. And in many cases, what happens is that changes once we bring the right comparable companies in. And if that changes, the valuation changes and 99% transaction goes back.
I think we are almost at close. Just give me an opportunity before Machara, you can give your close-up thing. Sir, I'm just sharing a screen. Unfortunately, it's a virtual webinar, okay, and I cannot have a physical memento to you. So it's just a thank you note, which will also be shared with you tomorrow. So kindly accept this small thank you note from us, and definitely, Sripal Bhai, it is also for you. A small thank you note from Hyderabad branch.
Thank you.
Both of you, I request you to accept for sparing your time and also giving your valuable views on the subject. Thank you very much, both of you. It will say, Abhishek ji, thank you very much, because two people came as speakers. I'll share your certificate tomorrow. So, friends, we'll just close it. I think, Master, you want to add something, or shall I just proceed?
So one request to the eminent speakers of the day. Sir, as most of young chartered accountants are not knowing about the listing things, sir. So as and when possible, I request these both guys to conduct some training session, like what are the documents required for pre-IPO and post-IPO compliance as part. See, I think most of the things they are doing it. And if they conduct for 2-3 days webinar or a seminar like this, not now, when possible for them, I think it's better for us. Yes, it's a small training session for preparation of a documentation for an IPO. So because very few people are knowing it and very few people are doing it, and we want to encourage the youngsters into this area.
Sir, can I add something? We can definitely coordinate. We can definitely coordinate and see to it that whatever is the requirement of the chapter, to the extent possible, as an exchange, wherever we can intervene, or probably as an intermediary, the merchant banker community, where we can help you in getting connected. We'll be happy to do that. And yes, we have started our relationship of a bit late, but yes, we'll keep it going. It will keep it ticking on. And anything from your side would be required to be assisted. We are there for you. You can definitely reach out to us for that.
Thank you, Abhishek. Thank you.
Yes, yes.
Sir, just one thing. the training session can be had, they can organize it. But in my view, the correct process is any chartered accountant who is interested in looking at SME exchange practice has to share the basic financials, just the signed 1920 accounts, with us as a merchant banker or with Abhishek ji and Gauri Shankar ji as a Nsc Emerge team. That's the starting point.
Yes.
You can send us 100 balance sheets, 200 balance sheets, and whichever from those we may feel that there is something worth looking at, then on a case-to-case basis, the training can happen. Because theoretically, this thing itself is a very, very complex thing. This listing or SME listing, there is no per se rule. You know, many times I've had clients who come to me from a same sector saying, sir, you listed this company, you did this way. Then I am same sector, you do this. I may not be able to do it. The nuances are little different in each case, as I said, because the main thing is the goodwill of the promoter, which is not something I can gauge on a paper. Over time, you come to know the goodwill of the promoter, because what is shares? It's nothing but a paper. How will I hold a paper if there is a certain amount of goodwill continuity in my head that, okay, this person is not going to run away. Otherwise, it has no value. No matter what profits you declare, if your goodwill is bad, people will not hold that share. And goodwill can only be judged when the process is started over time. I can't meet a person and be good judge of goodwill, you know. So ideally, as a CA, what is the first step from today's webinar or from today's, what should be the takeaway is share maximum possible balance sheets with the NSC team. Let them share those balance sheets with us and let us pick and choose and say, yes, this client looks interesting. There's a sector which I have seen a lot of investor interest in. Why don't we do a second meeting with them? And then over time, the CA can learn on the job, because theoretical training may not really work. However, definitely a training session can be organized on what are the due diligence processes and things like that.
Thank you. Thank you so much.
Thank you, sir. Thank you very much, everyone. On behalf of Hyderabad branch of SRC of ICA, and on behalf of all the participants here and my colleagues in managing committee, I'd like to thank Gauri Shankar sir, Sripal ji, as well as Abhishek Gaud for helping us through this session. And I'd also like to thank all the participants for being with us throughout the session, asking questions and trying to gain knowledge. I think, yeah, this day can be taken as a starting point for many new things to come. So we got the basics. Now let us take it and move further. We have excellent people in Sripal and Gauri Shankar ji. I'm sure you can take the help of all of them, and definitely we'll look forward to have a very bigger meeting with these people. Maybe post Corona, when Macharao becomes chairman next year, he will take up a bigger thing, sir. Thank you very much. Thank you. Thank you.
Thank you, sir. Thank you very much for inviting us. Thank you.
Thank you.
Thank you, sir.
We'll end the meeting.